Hello, this is Ira Koyner, the original IRA and president of Triathlon Partners. Today, we're going to discuss how to properly structure a permanent life insurance policy to maximize cash value. Now, this is something that's going to put hundreds of thousands of extra dollars in your pocket over your lifetime. Most high net worth owners of permanent life insurance are leaving huge amounts of money on the table simply because their policy wasn't set up the right way. Now, most importantly, when you buy life insurance, you have to choose the right policy type. Most brokers present whole life insurance as the only permanent life option, but that's simply not true. Index universal life, or an IUL, is an excellent alternative. Whole life has rigid terms, mandatory premiums, guaranteed growth, often around 2%, and hidden access fees of 7 to 9%. This compares to an IUL with flexible premiums, growth linked to market indexes, and low access costs. Now, the next step is picking the right IUL. Right? You have to look at the investment options. They often include a point-to-point strategy, which has a 0% floor and a cap maximum return each year. So the investment can't lose any money. Access fees vary by carrier and how long you've held the policy, and they range between 0 to 4%. Now, why structure matters, that we have the type and the right policy, we have to structure it correctly. Because this is an investment, it's not just a death benefit. Permanent life insurance, when structured properly, works much like a Roth IRA, but with no contribution restrictions. Your premiums are invested, the growth is tax deferred, and if designed and managed correctly, the money can be withdrawn tax exempt. Just like a Roth, the real power is in maximizing contributions and minimizing drags from unnecessary costs. Now, every premium you pay to an IUL policy is split. Part goes to the cost of insurance, which purchases the death benefit, and the rest is invested. Hence, the larger the death benefit, the smaller the portion invested and the slower your growth. Now, our objective is to maximize the cash value. How do we do that? Well, the IRS sets limits on how little insurance you can buy for a given premium. Too little insurance or too much premium turns the policy into a Modified Endowment Contract, or a MEC. If it becomes a MEC, it loses its tax advantages, right? It's like Cinderella coming in with the golden coach, and bam, she stays too late at the ball, and it turns into a pumpkin. That MEC is the pumpkin. We want to avoid that. So the goal is to fund the policy to the maximum allowed without crossing into MEC territory. The correct structure is base the death benefit on your expected premium commitment and set it at the minimum non-MEC level. This means we focus on the amount of premium you want to commit to investing as opposed to what death benefit you need. This is not life insurance that you purchase for death benefit. This is life insurance you purchase as an investment to be tax advantage. Right? So let me give you an example. I was recently speaking with a successful 25-year-old, and he does really well in his career, and he's dedicated to savings and investing. And he wants to dedicate $10,000 a year for 30 years in an IUL. Now, that premium can purchase between $1 million or $3 million of death benefit. Well, let's see the difference. We've already gone over that. The more money you spend on death benefit, or the higher the death benefit, the less the investment will grow. Well, that $1 million death benefit, the policy could be worth around $1.8 million at age 70. However, with a $3 million death benefit, it might only be worth about $1 million. That's a big difference. If we actually break it down on a return basis over those 45 years, the $1 million policy has grown 2% more a year than the $3 million policy. And this is just from proper structuring, because we've already picked the type of insurance, the exact policy we want, and now it's about making sure that policy is structured correctly. Now, if you're considering permanent life insurance, make sure it's designed to maximize your cash value and keep every tax advantage the IRS allows. And for those who already own permanent life insurance, you already made the decision to invest in it. Now let's make sure you're getting everything you can out of it. Contact us for a free policy review and consultation at www.triathlonpartners.com. The right structure can mean hundreds of thousands more in your pocket over your lifetime. Have a blessed day.